Hello and welcome to another episode of Filter Coffee with Quantace. I'm your host Shubhada Patil, speaking on behalf of Karthick Jongadla, a SEBI-registered research analyst. Before we dive into today's topics, please note that this episode is purely for informational purpose and does not constitute any buy or sell recommendations. Now let's build some fresh insights together. Why we are bullish on Nifty for July 2024? Alright, folks, let's talk about the buzz around Nifty and why we think it's gearing up for a strong July. Last time, we picked the net long positions of foreign institutional investors, that is FIIs, at about 90 to 95k crore. The market was on cash buying spree for a solid 2 to 3 weeks until June 28, 2024, and FIS rolled over long positions worth 24,126 crore to July. But here's the twist. Domestic institutional investors, DIIs, have switched gears. They have been selling to the tune of 5,000 crore in the last 3 days. Despite this, mutual fund inflows into the equity are still positive, which means either private investment companies or insurance companies have offloaded some of their holdings. Despite a recent sell off by DIS, we are still bullish on Nifty for July. We believe it's headed for the 25,000 mark. Here's a lowdown on why we think so. Looking at the weekly option chain, Nifty's short-term support is strong between 24,300 and 24,250. Long term, we are looking at the support levels around 23,600 to 23,400, with a second line of defense at 23,200 to 23,000. Retail investors are needed in options mainly as net sellers. The setup might backfire if Nifty goes up to the 23,500 to 23,600 range, forcing them to cover their calls and potentially pushing the index even higher. Given the bullish setup, here's where we see the action happening. Reality, finance, that is non-banks, and IT. We are betting that small and mid-cap stocks will mildly edge out large caps in performance. Keep an eye on what domestic institutional investors are up to, especially those private investment and insurance companies. Their move can shake things up. FIS have significant long positions, and any changes in their strategy could shift market sentiment. Their confidence is a good sign for continued growth. Retail investors are net option seller, which adds an interesting twist. If they have to cover their calls, it could create a short squeeze, driving Nifty higher. So be prepared, be ready for shifts in sector performance, especially with changing macroeconomic indicators or, in that case, some policy updates. In summary, we are optimistic about Nifty's performance in July 2024. The market support level are well defined and we believe high momentum, dual factor momentum and value stocks will lead the charge. Reality, finance, that is non-banks, and IT sectors are set to do well, and small and mid caps are expected to slightly outperform large caps. So, from here onwards, we're moving toward the next topic. So, why is India's defense sector booming? This is a very important question. When we talk about India's defense sector taking off, it's not just about spending more money on weapons and equipment. There is a lot more going on here. Let's dig into the details. First off, there's a major push from the Indian government. They are not just increasing the budget but also making big policy changes to boost homegrown manufacturing. Think of it in a way like a massive Make in India campaign, but only for defense. Today, about 75% of India's defense equipment is made locally, a big jump from previous years. The goal, what is the goal? To hit even higher, possibly around 80 to 85% in the coming years. This means less reliance on imports and more self reliance. But it's not just about making more stuff at home. The government is also making it easier for private companies to get involved. New policies are cutting through the red tape, making it simpler for business to get license and start production. With ongoing conflicts and rising regional threats, India's need to is arising in horizon to be always prepared. This means modernizing its forces with better equipment and technology. And let's not forget the strategic location of India. Being in South Asia comes with its own set of challenges and responsibilities. India's defense production hit a record high of 1.27 lakh crore in financial year 2023-2024. That's a 16.7% increase over the previous year and a 60% jump since financial year 2019-20. Of this massive production value, 79.2% was contributed by public sector undertakings (PSUs) and 20.8% by private companies. It's clear that both sectors are playing a crucial role in this growth. The Defense Acquisition Procedure 2020 includes the Buy IDDM, indigenously designed, developed, and manufactured category, which prioritizes the procurement of equipment that has significant indigenous content, ensuring that more of the defense budget is spent on Indian modern made products. The Agnipath scheme is a game changer for the military workforce by recruiting young soldiers for short stints and then absorbing the best into long term roles. India is optimizing its military strength and reducing pension burdens. This frees up more funds for critical defense projects. We are talking about a projected ordering opportunity worth US dollar 138 billion over the next 8 years. This isn't just for big players like Hindustan Aeronautics and Bharat Electronics, but also for smaller firms making everything from missiles to software. The defense aerospace segment alone is expected to see investment worth US dollar 50 billion, driven by modernization efforts, fleet expansion, and a need for advanced technology platforms. Defense shipbuilding is estimated to have an investment of US dollar 38 billion, covering naval vessels, submarines, patrol boats, and support ships. Missiles, artillery, and gun systems are projected to see an investment of US dollar 21 billion, focusing on enhancing artillery and missile capabilities. Defense exports have recorded a CAGR of 28% over financial year 18 to 24 to INR 211 billion. This momentum is expected to continue with defense exports averaging Indian rupees 300 billion annually over the next 8 years. Hindustan Aeronautics Limited leads with an order book of over 82,000 crore. Bharat Electronics Limited follows with 76,000 crore. Other notable companies include Cochin Shipyard, Bharat Dynamics, and BEML Limited. India's defense sector is also witnessing structural changes. The appointment of chief defense staffs, the launch of the Agnipath scheme for military recruitment, and the establishment of five theatre commands are aimed at enhancing strategic planning and military response. Policy reforms such as streamlining the licensing process, adjusting offset policies, and relaxing foreign direct investment limits are making it easier for companies to operate and thrive in this sector. This fund, expected to be over $30 billion, will ensure that money set aside for modernization is actually used for that purpose, reducing delays and ensuring timely procurement. The Indian Army's modernization efforts include the Quick Reaction Surface to Air Missile, Medium Range Surface to Air Missile, and Advanced Towed Artillery Gun System. The Indian Navy is focusing on submarine recapitalization and anti submarine warfare with projects like Project P751. Conventional submarines, next generation stealth guided missile destroyer, the Indian Air Force plans to procure new fighters, trainers, and helicopters worth $47 billion, including LCA Mk1, Mk1E, and light utility helicopter. The benefits of these initiatives extend beyond just defense. By boosting domestic production, India is also creating jobs, developing new technologies, and enhancing its industrial base. This in turn contributes to the overall economy, making the country more self reliant and less dependent on foreign suppliers. So, we urge investors to monitor both the order inflows and order execution very closely. The current valuation of defense stocks are expensive. If you are trying to make a quick buck in the next 6 months, then it is very risky strategy. Instead, you should have a favorable view of the defense sector and should be personally sold on the story to stay invested for the next 24 to 36 months. In a nutshell, India's defense sector is on a major upswing thanks to a mix of smart policies, strategic necessities, and a big push for self reliance. It's an exciting time for the industry, and the future looks promising with numerous opportunities for growth and development. Whether it's to increase indigenous production, strategic policy reforms, or expanding international market, India is poised to become a significant player in the global defense arena. Thank you for turning into this episode of Filter Coffee with Qantas. So, if you found this information valuable, don't forget to follow us to stay updated on the latest market trends and insight. Until next time, happy investing.